Welcome to the KMO Expedition. What's up, guys and girls? It's your boy Kimsley Zar, and you're tuned into the KMO Expedition. So, guys, I realized the first video I sent wasn't as exhaustive as I wanted to be, or detailed rather. So I decided to just form another video to give you a gist of the strategy. Mind you, this is a technical trading strategy, guys. So I'll mostly be using patterns and trend lines, right? Just embodiments of the market to show you which direction we would be taking during a trade. Either we'd be selling, either we'd be buying. So guys, every time I'm having a session, I'm just going to upload it so that you guys can at least check the same pair and then check if you guys can get some luck or not. But guys, in the way that we trade, guys, it's really assured as long as you follow the trading plan and stick to it, regardless of how many losses you may get. Just stick into your your trading plan. Excuse me. Stick into your trading plan is the most significant thing to do, right? So, guys, let's get into it. So basically, guys, the strategy is by Elliott. So Elliott wave teaches us that the market moves in impulse, right? Sorry about the impulse, correction, impulse, correction, impulse, and correction. So what you need to understand is it's a three-wave cycle, guys. In every market, we are most likely to get three corrections before maybe the market changes direction, right? And what we need to know is every correction plays a role. Every correction means something. Every correction is either a continuation or a reversal, guys. And that's to the downside. Impulse correction, impulse correction, impulse correction. This is to the downside, guys. The same thing happens to the upside, right? Impulse correction, impulse correction, impulse, and then a correction. Natural progression of the market always, guys. So the most significant things to spot and understand is these patterns, these Elliott's wave patterns. Let me show you guys. So according to Elliott, this 1 2 3 4 5 wave or cycle is an impulse, and then this ABC is a correction. But what you need to understand is within every correction or every impulse, there's smaller impulses and corrections. Like here, guys, it's impulse, correction, impulse, correction, impulse, and a bigger correction. But all this 1 2 3 4 5 move is actually an impulse, right? So if you understand the gist of this, you're able to understand if either the market would be taking you to a buy, a sell, or simply changing direction, right? Or continuing to the same way it was. So let's get back to it, guys. So Elliott wave has specific patterns that teaches you. So like we were saying, we're starting with continuations. So this how it goes, guys. It's an impulse, correction, right? And then natural progression would be an impulse to the downside. This is a flat continuation pattern, guys. And then there's actually another continuation pattern, which is a triangle. It's impulse, correction, and impulse. I think, guys, you can spot the difference here. That this is 0, A, B, C, and this has more than just. These are the different continuation patterns that you get within the market, right? And it's the same thing bullish as it is bearish. Guys. Impulse, see, impulse, correction, impulse, okay? Impulse. Same thing within every C leg takes you to a continuation, guys. this is exactly how the market plays out every time, guys. X, A, B, C, D, E. Every time, guys, this is how the market plays out. These are continuation patterns, or a correction, as you might call it. This phase is a correction, guys. Consolidation phase is a correction. What you need to understand, that a correction is always a pattern, guys. That's what we always need to keep in mind. Same applies with impulses, guys. Impulse is the same way, guys. Let me just, I'm sorry about that. It's free drawing, guys, so don't mind my ugly drawing. But anyway, a motive wave, or in fact an impulse, is like this. It's 1, 2, 3, 4, 5, which you need to understand. It's impulse, correction, and impulse. But then generally it's a bigger impulse wave, right? It's a bigger impulse wave. That's how you'd basically analyze it. If maybe you're looking at a reversal, and then you'd get something like an A, B, C, right? Something like an ABC that would be showing you that the market is actually about to take a reversal, and then it goes up correctively. You analyze. From there, the market drops, right? And this would be a reversal, right? This would be how you would take a reversal. And guys, so going on to a bearish move, the same thing. A bearish one comes, okay, fine. Same thing with a bearish move, guys. Sorry about that. Same thing with a bearish move, guys. A bigger impulse. It's a bigger impulse like this. As you're looking at it, guys, same thing happens every time, right? See, every time a reversal is about to happen, you get an inverse. So you get an inverse, and it corrects like that, and then that's where you take your entry for a buy up until at least 90% of the structure, guys. 90% of the structure. See, it's not simple, guys, but it becomes much more easier to spot, much more easier to see, if you are allowing yourself some time to study these patterns, guys. So we're gonna go deeper into the market so that you get these clear explanations within the markets, guys, so that you can be able to spot what a continuation is, what a reversal is, and so on, guys. So let's head to the market, guys. Let's head to the charts. In fact, let's head to the charts. So we're basically going to be just focusing on this part, guys, on just this part, right? On just this part, guys. So we can see this is our top, or our highest high, in fact, in this market that we're looking at on the 4-hour time frame. I don't want to go into detail about that. Just really go into frontal, just to get the glimpse of the strategy. Our highest high. So we can see that this was our resistance point, and this is basically a support, right, or a resistance level and a support level. So guys, heading to the 4-hour time frame, I take you through the strategy exhaustively, and I don't want to take too long explaining just one thing, guys. I wanted to make this video as short as possible. But then anyway, guys, this is basically how it would be. This would be what we would render as a rising wedge, which means it's a reversal pattern, guys. This is a reversal pattern, in fact, like that. This is basically our reversal pattern. See, guys, this is basically how it is. 0, 1, 2, 3, 4, and then this is 5, guys. So this is an impulsive reversal wave, or diagonal wave rather. And then X, A, B, C, right? This is basically showing you a reversal, guys. This is basically showing you that ABC that we were talking about, and then this is the corrective phase. See, it's impulse, correction, and impulse. That the last correction is a reversal, guys. I think you guys can spot that. So this is how we would basically spot a reversal, and then different from how we would spot a continuation. Like over here, guys, see how the market came like this, right? And then it was A, B, C. See, this one is a continuation, guys. So how you would take this type of trade is you would maybe most likely analyze it like this to the smaller time frame, right? I'm not gonna be showing you just, guys, I just want to show you how to not take flunks in these kind of trades, guys, right? So the top part over there would be where you would put your stop loss, and then your target would most likely have been right there, guys. A 3% reward would have been so bad, guys. A 3% reward would have been really nice, really nice. That's about 623 pips, so you can imagine how much that is, guys. So this is a continuation, guys. I think you guys can spot it. In fact, this is a bearish continuation. Targets. I don't want to be greedy in the market. I think the idea is to always remember not to be greedy. So within this impulse, guys, let me show you. This reversal. This is a descending wedge, guys. A descending wedge. It's a descending wedge, which is a reversal pattern, guys, within the 4-hour time frame. This is what I'd basically be doing. I'm just generally showing you what I would basically be doing. My thought process every time I would be taking a trade, guys. So this is 1, 2, 3, 4, 5, a truncated fifth wave. And this is the concept of the double bottoms that you usually see, guys. Right? A, B, C. Okay, in fact, guys, I think with this one I'm wrong. I think it's 0, A, B, C, D, E, guys. Yeah, I think this is basically how this one is. It's a correction, right? And mind you, guys, we've had corrections coming along, and the thing is, you should be able to spot which type of correction it is, correction phase it is. Sometimes you do see a correction and you think it's a sell, like over here, guys. You would have thought maybe, okay, impulse, correction, and then impulse, but then you realize no, it's actually a reversal, right? Continuing with the trend, or would be taking a reversal, or you just simply want to wait, right? If you are more of a safe trader, guys, you would want to spot. So this is basically how you take that one. And on this last leg, guys, it's where you'd basically be, okay, this is a reversal, this is my reversal, guys. I'd be taking the trade over here. Let me make sure my stop loss, guys. So this is a continuation pattern that you would see, okay. And then at this last leg, it most probably just analyze it like this. Of course, guys, I'm not really going into detail. I just don't want to make this video really long. If you guys want more content, please make sure that you like, subscribe, comment down below if you want a more detailed strategy on this one, guys. So this is basically how I would take my trades, right? Over there, knowing that I'm focusing on going up to the upside, guys, to the upside, maybe spotting this next high over here, and the following high over there, guys. You see I have two highs. Be my first take profit and my second take profits over there, guys. So this is a continuation. You can see that after that I'd maybe take a buy stop entry right over here. This right over here, buy stop, guys, and I'd be activated into the trade. Yeah, sorry.